Hi, this is Zak Mir from Master Investor with a look at some bulletin board hero stocks on Monday, the 30th of March. And I'm starting off with Fitbug, where it looks like we've got a bit of a revival, a decent revival here, and coming in the form of a rebound off the 200-day moving average, currently running around the 4.37 pence level. That's the feature here. We're sort of dipping towards that over the past week or so, and shares bouncing off oversold RSI levels below 30 as well. Decent weekly close above the 50-day moving average at 5.89 pence, and really while we're above that, we're looking for an initial retest of the 10 pence zone over the next 2 to 4 weeks. Best case scenario over the next 2 to 3 months, probably as high as a partial or even full retest of November resistance at towards the 20 pence level. At this stage, really only back below the 200-day moving average on a weekly close basis would be outright negative for the shares, even if we sort of bounce around between the 200 and 50-day lines over the initial few sessions early this week. Next up is Ferrex, where we have a decent looking development as well. Looks like a sort of bull flag consolidation here above the 50-day moving average, 0.59 pence. That's also the floor of a rising October price channel as well. Initial target back towards the 1 pence level. That was support in the summer. And also that's the top of the October channel as well, and near the 200-day moving average, still falling at 0.93 pence. So that's looking like a recovery situation. The end of day close back below the 50-day moving average, the stop loss in the first instance. Shares that are looking very sprightly indeed at the moment are ITM Power. There's been a sort of a bit of a hiccup here. The main problem here was that the shares broke down from this bull flag consolidation at the end of January. Horrible bear trap below the 200-day moving average after that, and then consolidation either side of that is typically seen. Unfilled gap here through the 200-day moving average was the first sign in the near term that the shares were back in business, and then the break of the 50-day moving average was support above it at 28.59 pence. Last week. Target here now up to as high as 45 pence, which would be the top of this September rising trend channel. Stop loss in the first instance probably back below the initial March resistance, just under 32 pence. Going on to shares which we haven't looked at for quite a long time, but look to be quite interesting nevertheless, and that's Strategic Minerals. Rampant end of week close back above the 200-day moving average and the 50-day moving average at the end of last week, 0.47 pence, the 200-day line. And while we remain above that, we would expect the shares to make quite decent and quick progress towards the top of this July price channel at 0.8 pence. Stop loss on the buy argument at the moment, back below the 50-day line, 0.43 pence. Finishing off with a stock which seems to have created a lot of excitement. I sort of missed talking about it and showing off, I suppose, the charting skills, in the sense that the top of this channel from last month was going through 7 pence, so that was going to be the target when the shares were consolidating towards the sort of 4 pence level at the beginning of the month. The situation now, after the sharp pullback that we've seen, is that we're looking for support to come in towards the floor of this channel. This February support line running at 3.77 pence, and that is the area of the 20-day moving average as well. So ideally, any dips towards that area now can be regarded as buying opportunities, and only an end of day close back below the 20-day average would delay the upside scenario, which is currently a partial or even full retest of the best levels of the month to date. Also some resistance possibly coming in as an initial target as well, with this peak that we had at 5.25 pence. So worth looking at that. If you're cautious on the stock, maybe you'd wait for that to be broken again before going long. That's it from me. More updates at masterinvestor.co.uk.